Thank you very much for your time, and thank you for joining me on this video walkthrough of our advanced 10-year financial forecast model template for existing or startup schools. This template includes valuation as well as various detailed assumptions that relates directly to private school establishments. So the model itself starts with a user guide. The user guide basically gives an overview as to how to use the model, how to make any changes to the input sheets, and what the key features of the model are that you can expect. So the model itself has been designed to start with one of the key components of this template, and this is the dashboard and annual projections sheet. So you'll see that the top of the model houses various high-level ratios. In this example, what the total funding requirements are, the cash balances throughout the projection period, your investor returns, cost of capital, cost of equity, actual number of students over the forecast period, etc. The year 1 to 10 projections are based on a startup, but as I mentioned, you can also use this as an existing establishment. If you open up the top section here, you'll see that your previous 2 years financials can also manually be input into this template to provide more of a factual indication of actual operations. What we have incorporated into this model as well is your forecast period. So if 10 years is too long of a period to look at in terms of forecast, you can toggle all the way down to 3 years. And you'll see as soon as you do that, you can automatically then see the rest of the years are hidden or removed, and it makes reading and navigating the model much easier. So any year from 3 to 10 years, you can choose when you toggle the forecast period. So let's, for the purposes of this walkthrough, look at the 10-year period. All valuation elements, which we'll discuss briefly, the results of the valuation, are all of it is also included here in the dashboard. It automatically links from the company valuation sheet here at the bottom. And you'll see, in addition to just using the standard discounted cash flow methodology, we have included other valuation methods as well for the purposes of giving a broad range as well to our clients. We've heard feedback from our clients in the past that they want to see additional valuation techniques as well, and we have incorporated into this version of the template. So this is automatically included for you. The model itself starts with the general assumptions linked to the financial statements, inflation rates, currency. You've got a drop-down list, so you can use most of the major currencies can be selected here. In this instance, we're working on South African Rand. You'll also, as part of the template that you download once you've purchased it, receive a mock version, so you can follow the logic behind the model itself in that mock version. Taxation rate, working capital, any dividends payable, everything is included here. All funding assumptions as well, whether it's debt or equity, are housed in this assumptions sheet as well, and so too the cost of capital parameters that drives the valuation is included here as well. So specific to this model, we would then look at the operational assumptions that's linked to a school establishment. So academic period, tuition fees. So you've got the ability to split your school into 4 different categories. So in this instance, preschool, lower primary, upper primary, and high school, along with the associated tuition fees. Any deposit requirements for a student to actually join the school will automatically be housed here. Any annual administration fees, and here for the four various school divisions, so to speak, the components that relate to student intakes, number of students that actually leave on an annual basis will be housed here. What we've done as well is each of the four school sections or divisions can then be further broken down into various grades. So as an example, the lower primary school, we worked on grade 0, 1, 2, 3, the upper 4, 5, 6, 7, and then high school up to grade 12. Automatically, based on your assumptions that you've input here, and remember, as per the user guide, any assumptions that you need to input are only input into these yellow shaded blue text cells. All the rest are automatically calculated for you. So number of students per division of the school automatically calculated for you, total number of students at the start of the year, end of the year, growth of students. Teacher to student ratio, here you can indicate how many students are allowed per teacher, and automatically in the model, as soon as you exceed that, it will tell you that, listen, there's too many students per teacher, you need to appoint another teacher. So this is quite important. This is an important parameter that our clients from the education sector wanted us to include, which we did. Teacher requirements, based on your assumptions there on the ratio, teacher to student ratio, automatically shows you how many teachers you are required to appoint to meet those ratios. Any teacher's assistants can be added here as well, and here's the check whether the teacher student ratio is okay, the class size is not too large or not too big. So it automatically incorporates this check for you, and that's the same for all the four divisions of this school. Any direct labor costs, so in other words, teachers and teachers assistants, any performance bonuses that they are paid, any medical aid, any UIF or wage taxes are automatically calculated for you. And here you can get an idea per division what the cost to company is for your establishment. All right. And the key operational ratios that's automatically calculated for this business or this business type would be new enrollments, number of students, loss of students, admin fees payable, etc., etc. So all of this eventually culminates in your overall school performance, and here you can get an idea of year on year what the number of students are, what your total cost element are in terms of teachers and teachers assistants, and what the expected revenue per head is. Any IT infrastructure or electronic equipment infrastructure can be defined here based on the number of students, any administration systems, CRM systems, software licenses. And once all of these assumptions have been completed, your three financial statements will automatically be calculated for you. So you'll see here the profit and loss, the income statement is calculated. Your break-even point automatically shows whether you are in excess or short of the break-even point. The cost of tuition resulting in the gross profit, your operating expenses, and right through to the last section, your net income or net profit. So too, the balance sheet and cash flow statement are automatically calculated for you. Also, any key financial ratios, liquidity ratios, and all supporting schedules are automatically calculated for you. All the charts, once again, automatically calculated for you without any manual involvement on your end. We've also included a monthly forecast on the three statements for the first year from month 1 to 12. The company valuation that I've mentioned earlier, automatically calculated for you. and you'll see any errors that are made in terms of input are automatically shown for you. But as it stands here, balance sheet check is still okay. Here the unlevered and levered free cash flow is automatically calculated for you, as well as the investment returns. Free cash flow automatically calculated for you. And then the various company valuation methods that we've used is here automatically calculated for you without any further involvement from your end. And we've also calculated both the enterprise value as well as the equity value. The supporting inputs that drives the rest of the model is housed here, split between the funding assumptions. So in other words, any CAPEX or land or equipment or machinery that you want to fund or need to fund as part of the setup or growth is housed here, and so too any working capital and provisions for contingencies are housed here as well. Also, depending on your funding structure, here you can make these changes here, whether you're going to fund via debt or a combination of debt and equity. Maybe you're going to provide your own contribution as well to the business. Depreciation automatically calculated for you. You've got the opportunity here, if there's additional CAPEX expenditure in year 2, 3, 4 to 10, you can input it here and it will automatically update the depreciation and CAPEX schedules for you too. Labor, indirect labor, remember the teachers and teachers assistants, which are classified as direct labor, have automatically be calculated and completed on the dashboard sheet as part of the inputs for direct costs. This section only focuses on any indirect labor, so maybe the principal, head of departments, maybe there's kitchen staff, administrative staff, support staff, etc. All of those inputs are included in here. Headcount, years in which they will be appointed, as well as their monthly salaries. And then finally the OPEX, operating expenditure. Here you can toggle and decide whether these type of fees are paid on a month-to-month basis or annual basis. And provision for contingencies or a cash buffer automatically calculated for you. And this pulls through back to the profit and loss statement. So what we have included just as additional information purposes is the debt funding components. So your interest repayments and principal repayments are automatically calculated for you. And if this is an existing school establishment, if there's any existing loan, all that information can be housed here based on the inputs of the dashboard sheet. So thank you very much for your time. I trust this walkthrough provide you with adequate information to see the functionality of this template that you will be purchasing. Thank you.